Welcome back. Now, the South African Reserve Bank has cut the repo rate by 25 basis points to 6.75%, bringing the prime lending rate down to 10.25%. Now, this marks the sixth cut in the current cycle aimed at supporting growth while managing inflation, which ticked up to 3.6% in October, above the bank's new 3% target. Joining me now is Sanisha Packirisamy, Chief Economist at Momentum Investments. Sanisha, thanks so much for your time today. A little Christmas gift. Santa came early for most South Africans with that 25 basis point cut. Had you priced it in? I mean, I was talking to economists earlier, and many seemed divided.
Thanks so much for having me. The decision to cut interest rates, if we look at the market consensus, was very split into the run-up of this meeting. But I think it became increasingly evident that they would pull on the trigger the closer to the meeting that we got. I would say that over the last couple of weeks or so, we've been receiving a streak of positive news in South Africa. The fact that South Africa got itself off the grey list from the Financial Action Task Force. We had a budget that was received very well by the market, a revenue number that looked a little bit better than what they were anticipating in the national budget. Structural reforms continue. Inflation remains reasonably moderate. And of course, we had very good news from S&P Global last week in terms of South Africa's sovereign rating also being lifted and maintained on a positive outlook, another vote of confidence. And, the Rand has received all this news quite well indeed. And so, that lineup of good news stories, actually buffers up that background, allowing for further monetary policy easing.
And that optimism also filtering through to some of the SARB's forecasts. We did see Governor Lesetja Kganyago also raise the growth forecast to 1.3% this year, with household spending holding up despite uncertainty. Perhaps let's talk about how these rate cuts have started filtering through to the economy, right? We've seen, 12 months, right, post that first rate cut in September last year.
Often, there is a little bit of a lagged transmission mechanism from when interest rate cuts hit to when it actually impacts the economy. But essentially, we are seeing it coming through into lower borrowing costs. So over time, that will help corporates to lend that money and then, of course, grow into the economy by investing and hiring new workers. Over time, it also helps the households that are indebted. So any of the households that have mortgage debt or vehicle loan debt, so typically your middle and upper income earner now have a little bit more leeway in their purse at the end of every month because they're paying less on those borrowing costs. And of course, that frees up some spending to come into the economy. And I think that's part of the reason why those household consumption forecasts by the Reserve Bank look reasonably healthy. But also not to forget that inflation, has been quite moderate this year. And so that has opened up real wage gains. And typically in South Africa, we don't have a lot of household savings. And so when there is that opening up of real wages, it tends to go straight into the purchase of goods and services in South Africa, which also boosts household consumption and then overall GDP.
And with that optimistic outlook, you talk about inflation remaining moderate. Something caught my attention in the MPC announcement yesterday when one of the journalists asked the governor why the MPC didn't go for a 50 basis point cut. Kganyago stressed the need for caution. As I mentioned, given that inflation backdrop, was this a missed opportunity to perhaps be, front load that easing?
There was actually another question by one of the journalists, which I'll bring into this response, which was to say, how do you characterize the year of 2025 if you had to sum it up? And he basically said it, in one word, it's uncertainty. There was a lot of uncertainty that came through in 2025. And so in an environment where levels of volatility and uncertainty remain higher than the long-term averages, I think you do need to be a little bit prudent in terms of the monetary policy outlook. So I think taking taking, a more cautious approach will hold us in good stead, because even though, the risks to the inflation outlook are balanced, there are still some factors that could potentially surprise to the upside, and we don't want to be caught off, on the wrong footing if we cut by too much and too soon.
And on inflation expectations, Sanisha, are you concerned about that? The last print I can recall, inflation expectations had reached record lows in Q3, but still above 3%.
Now, Ms. I was quite surprised to the extent to which your inflation expectations, as surveyed by the Bureau for Economic Research, actually came down. And I think that's testament to the credibility of our central bank in South Africa and their ability to bring down the volatility around both headline and core measures of inflation. And so when you look at credibility of various central banks around the world, the SARB is right up there with the best. And I think that's coming through, quite strongly from that angle.
All right, let's leave it there, Sanisha. Thanks so much for your time and just taking us through your analysis of yesterday's MPC meeting. That was Sanisha Packirisamy, Chief Economist at Momentum Investments.